Good afternoon, welcome to Join the Dots. Now, I'm not quite sure which day this will come out. I think it'll probably hit the screens on Wednesday. See how things go. But I had to do this one because I read a very important piece today which ties in with so much of the macro that I've given you, particularly the end of the Japanese carry trade, the unwind of that carry trade, which has been there now for a good 30 years and has been used and hugely abused by institutions to invest by using borrowed yen into other currency assets, leveraging it, etc., derivatives, anything you want to name, they've done it. So if for any reason that had to unwind, the consequences would likely be colossal. And the unwind would not take 30 years, more like 30 days. Because when something moves fast and it's colossal, the markets react very quickly. Like the subprime crash when you saw Lehman's. Within days, the whole market had adjusted to post-Lehman. Now I'm going to bring you a few things here which will link in. Bear with me. First story came out about 1,500 protesters outside the Japanese Prime Minister's office protesting about her comments on Taiwan, which led to China getting very angry and talking all sorts of things, flights cancelled, no tourists for Japan, all sorts of implications on Japanese-Chinese trade, Sino-Japanese trade, all sorts of implications. And this is typical Chinese aggression, bullying through economics, even if they're not bullying through coast guards firing water cannons at Filipino fishing ships. They bully. That's all they know how to do. But they do it well. And so I can see this 1,500 person protest growing. And it puts enormous pressure on the Japanese Prime Minister, who has refused to retract her statement about defending Taiwan. And Japanese need to defend Taiwan. This is consequential. Okay, this is very consequential. Let's move on. Next story is Japanese are proceeding with the stationing of Type 03 Chu SAM air defense missiles on Yonaguni Island near Taiwan, citing rising tensions with China, says their defense minister. So what you can see here is a political disturbance and a serious one. This is not a small one. Okay, and face comes into it. China can now not back down. It cannot back down, and nor can the Japanese, or nor can she want to. However, is this a Liz Truss moment? Is this a moment where she just went too far too quickly and the market and China are going to overwhelm her? Who knows? Who knows? So what I'm going to tie it into now, and this is really important because I looked at the yen today. The yen's about 157, okay, to the dollar. Now that is approaching its all-time low, and twice it's peaked just about 160. So we're very close to the yen being at its weakest ever level. And that's important if you're running the carry trade, because the carry trade relies on the yen not getting stronger. And if it's already almost at its weakest point, there's almost only one way it can go, unless it shoots beyond normal bounds. So I found this piece by Michael Cowan, and we've done Michael Cowan before, so we know he's good. It's all about the yen carry, his story on that trade. Now remember the Jake Claver video, and I'll link it here. I'll get Craig to link it. Okay, remember the Jake Claver video I gave you on what would happen and how they would possibly utilise XRP to bridge the unwind. Because the unwind is, we're talking 20 trillion. And we're talking with derivatives as well, maybe more. That could all unwind in 30 days. Can you imagine the consequence? Can you imagine? I don't think anyone can. So the first 7 minutes of this piece by Michael Cowan is, what is the trade? And then he asks, has the unwound begun? If it has, it will, not might, it will affect all assets, more especially the high flyers. Anything that's been leveraged. Think of Bitcoin. Think how many people are running leveraged positions. Now, a lot have been shaken out probably by the 30% fall. But anyone who was in there early is still in there and still in there long, okay, because they've got a lot to play with. Remember, it's moved up massively. So the 40-year bond rate, the Japanese bond rate, they have a 40-year rate, is 3.7. And that's suddenly approaching where the US 30-year rate is. Okay, that's at 4.7 still, but that 1% gap can close very quickly. Especially if, for instance, you have a Liz Truss moment with the Japanese Prime Minister, where she gets forcibly removed under enormous pressure from China, maybe local pressure from people who are influenced a little bit by China, protesters outside the palace at the moment, or her residence. So what we've got in Japan is we've got a system whereby at the moment they have a 250% debt to GDP, and everyone's panicking over America at 130. Okay? It consumes the interest, even at the low rates that the Japanese bonds have been able to finance at. The income consumes 23% of annual tax payments, tax receipts. So a loss of confidence, which is coming, this could really be very consequential. Okay? So the new leader, under extreme Chinese pressure, general market fear, caution, yen and a bond sell-off. Now, as I say, when the yen is already at its almost weakest point, nearing 160, people will be very scared of it strengthening suddenly if they have to raise rates quickly. And if they raise rates quickly and they catch up with the US rate, then there's no carry trade advantage. And then you have a total exposure to the currency. And if the yen was suddenly to appreciate on the back of, say, the PM standing down, and therefore the fall then corrects itself, you could see a massive move in the carry trade. Okay? So in this piece, 9 minutes 50 to 10 minutes 50, listen to the consequences of an unwind, because I think he's pretty accurate. Okay? And there's a 55% correlation with an S&P fall when the yen strengthens. It's a huge correlation. 10 minutes 55, SoftBank sell on NVIDIA. More behind this, as SoftBank had pledged to invest 100 billion in USAI. So if they pledged to invest 100 billion in USAI, and yet they sold NVIDIA. So after selling the NVIDIA shares, guess what? SoftBank shares fell 10%. So can they still invest 100 billion? There's a fear in the markets. There's a fear in anything related to AI and anything related to Bitcoin. There is a fear. Don't ignore it. Never ignore fear. Don't be completely influenced by it, but don't ignore it. So basically, everything is pointing to an unwind. And to be ahead of that is an incredibly sensible move. To anticipate it, to think, well, I better hedge here. I better at least protect myself from this, because this could be monumental. And remember, the markets are looking for something monumental, aren't they? They're all on the edge. So if something tips them over, it tips them over, and it's a long way to fall. Okay? So I think you need to watch that Jake Claver video, which I linked within my piece on the Japanese carry trade unwind and the possible use of XRP to bridge it. 12 minutes on, listen carefully. Here, after detailing the economic risks, Michael picks up what might be the biggest signal risk, China. And that's what I say, could be a Liz Truss moment. Severe pressure on Japan, tourists now not coming from China. That's a large part of the Japanese tourist trade, a large part, again, or a significant part of their GDP. So therefore, they're already running a 250% deficit. It hurts. It hurts economically. And politicians, when they're hurt economically, generally react badly or short-term wise. So what he says here, and I think it's very fundamental, and you need to understand this, the Japanese yen has effectively financed the last 30 years of global growth, particularly the US boom. And it has, because they've all been borrowing at almost naught, and they've been investing at 4, and they've been leveraging it 5 times. They're now getting 20 for naught, or 5 times naught, which is naught. So it's been abused, massively abused. And there are derivatives linked to that all over the place. Okay? So we've got to be careful here. So not only did investors, funds, hedge funds borrow, but they may be leveraged up 5 to 10 times, he says. Hence the 20 trillion figure. This trade is approaching the point where it no longer makes sense. And that's because the yen is almost at its worst, its weakest. Okay? And as I say, Jake Claver linked it to XRP. Now, I heard, and this is true, that all Japanese financial institutions had to sign up with XRP and had to be ready to use cryptocurrencies. Now, whether it's specifically XRP, I believe it is. Okay, I believe it is. And so therefore, they're already in place if they have to use this. So when I see the risk reward that's coming, when I see the risk in the market of something monumental, exaggerated now by these two stories of what's happened with Japan, what the Prime Minister said, what the Defence Minister has subsequently said about placing these missiles on this island, which is very close to Taiwan, to defend it, and what the Chinese have said. And they are very, very angry about this, which goes back culturally hundreds of years, and particularly to the war, Second World War, where there was so much abuse by the Japanese army of the Chinese population generally. So it's deeply ingrained in their culture, and it's deeply populist. If the Chinese want to invoke a movement from the people, it will not be difficult because it's there. It's there ingrained in them. It's in their history, it's in their culture. And while the Japanese have sort of apologised profusely for this time and time and time again, it will never, never, ever be accepted by the Chinese without some element of revenge. And here is an opportunity. Here is an opportunity for them to show how powerful they are in the region by forcing Liz Truss, forcing the Prime Minister out over this issue. Just saying it's a chance. Now, if it's a chance, what is the risk reward of XRP in that position? Well, the risk is very low because obviously we're down at around $2 at the moment, and that's quite a low price given the performance of the last year. But what is the reward were it to be had to be used to unwind 20 trillion globally? Okay, Jake Claver's video covers that, so it gives you some idea of the consequences and numbers involved. So it's a very worthwhile piece. So I will link my video that I produced on the emergency exit using XRP to unwind the carry trade, and within that you will catch the Jack Claver link, so therefore you can watch both. Okay, so this is a very important message to you because and I've got experience of this because I actually used the Japanese carry trade when I had a mortgage of quite a lot in the UK, quite a significant mortgage. I actually borrowed in yen because I understood it at the time, and everyone else thought I was mad. And I had a 10-year mortgage basically, which I ran for 10 years at 1.5%, while the UK was 6, 7, 8. And then when I came to repay it, it actually cost me less in capital because the yen had weakened. So I actually received money for borrowing money for 10 years. I was quite good. I was pleased with that. And that's what institutions, hedge funds, funds, everyone has been doing for the last 30 years in the market. Hence, there's a 20 trillion issue that might now, payment might become due. So please consider this, look at the links, and I'll be back tomorrow. Thank you very much.